ICS, War Room ICS number 19, trainee Alan Vergara. We have this one, new share. We got Tesla in front of us. We're going to take a look at Wolfe Wave and a few ideas on positions. Hello?
Hola.
Hola, how are you, Alan?
I couldn't wait for this session.
Okay.
Always.
Yeah, ready. Okay, so today we have a lot of work to do. Okay. We're going to cover, we're just going to put a few ideas on the waiting list, on the waiting list, and have some perception about what it's going to take place in the first 3 months of 2020. And as anacondas, we're going to wait, and as eagles, we're going to just look at all that we have on the table and track and prepare to shoot. Okay?
Okay.
First one, wanted to talk about Tesla. Okay, now it's a little bit tricky, this one, because Tesla, and right now you're looking on your screen the chart via MetaTrader 4 with the indicator of Wolfe Wave that has nothing to do with Elliott Wave, by the way. And what we're looking here is a continuation of what we call the chain of Wolfe waves, which is extremely powerful. And that means that you have not one, you have two continuations of the Wolfe wave. Now, the target here ended at this level, 380. Now, the practice is that the Wolfe wave, once completed, will retrace, will come back. Okay, so if that's the case, number one, our first bearish target for Tesla will be 380, which is only $20. That's 5% from this level. Currently, we're trading at the 400 level, 412, 405. So a push lower to this initial support will represent minus 5%. Okay, then the second level to consider will be this support that I'm pretty sure your eye is telling you that here there's a trend Fibonacci. If you look at it, pullback, I guarantee you this is a trend Fibonacci level, and then push up. So the next level, next support to consider will be the 327. So two levels to consider, 380 and 327. So any sell-off, any drama that Elon Musk may create, any failure from Tesla that we may expect a failure on the amount of vehicles that they can be producing or selling, will bring back the stock to these two levels. Okay, this is what we expect. This is what we have. And remember, there's a gap here, a bearish gap. But it's very hard for us to see this right away. Of course, if they were to fill it, that would be 267, but still the stock will be based on a support. Now, I want to mention, I want to point for you is that look at this level here. Resistance now becomes, again, resistance. That will become support. Resistance at this time, and now it will be support. So 267 will be a strong area of volume for Tesla. Our goal here will be to find today, based on these levels, put opportunities. How to short Tesla. The reason why, fundamentally, now let's shift to fundamental views. First off, we know how investors can accelerate from love Tesla to dumb Tesla easily. Yeah. We have seen this before. It's not something that requires rocket science to understand. It's pretty simple how we see it. The second thing, that is a company that is facing still major challenges when it comes to deliver vehicles and the whole experience with the vehicles. And the third view is to understand that other companies with huge pockets, Ford, Volkswagen, they're already associated and working on electric vehicles. And there are others that are also in the career to deliver electric vehicles. So Tesla is no longer that darling that is alone
Mhm.
dancing. There are others that want a piece of the cake and they have enough resources.
Mhm.
So they are at risk.
Mhm.
So this is our understanding. These are the levels. Also, one more thing I want to point out is to understand this critical level. The 220 level is where Elon Musk has invested millions of dollars of his personal wealth into the company. How do we know that? Of course, I will just leave this so we have all the notes. And now I will quickly delete all the drawings and take a moment to switch the screen to Open Insider. And I'm going to share with you the levels where we have Elon buying stock. Do you see it now?
Wow. Yes.
Okay. As usual, we always have the lead indicator on our side. Not only we understand price rotation, trend Fibonacci, technical skills that will give you an edge in this business, but also understanding where's the money, where's the big money playing. Look at the level. The last level he bought on this year on May, $25 million. That happened at 243. Then the year before, we have a massive purchase, 334, 343. Okay, so those are the levels that we have to consider. There is about close to $34 million of personal wealth from Elon Musk.
Question:
Yes,
how come the own is 0%? All of them.
0%. There's always probably he later transferred that.
Okay.
So at the beginning you see this, and there's a participation, and maybe they probabilities that he transferred that to a foundation or something. But he bought it with money, his real money.
Yes.
So
Okay.
he tends to do. Elon Musk is the kind of guy that he puts his money in his businesses. It's not the
Yeah.
first time. He
Okay.
had this, I think, with SpaceX. He has some
He
challenges.
diversifies. Yeah.
Yeah, and he put money directly. He's always willing to back up. This is a total different animal. This guy, he puts money where he's actually going. So that's one thing that no one can take from him. So understand this information. As you can see, there's a lot of money invested between 334 and 343. If I go back to the chart real quick, and we'll do that. Here we go. The 343, you can see here, this level, 343, 320. There's no accident that the support happened here. And then you also see there's a level of interest at 342. So that will be a final place where we'll see prices easily after crossing this minus 5% level that we discussed, crossing all the way to this level and doing this, the sideways pattern. This is the opportunity that we want to take on any pullback on Tesla during 2020. How are we going to do that? Of course, our vehicle of preference will be to short via puts. And at this moment, that's exactly what we're going to do. Let's find something that makes sense and put it on the different lists that we have. We're going to go to Old NASDAQ, our tool of reference.
Are you sharing it?
Let me share that with you. To go back to the screen. Do you see it now? We have Tesla and we're going back.
So we're looking for puts.
We're looking for puts. Looking for puts based on the technical view, following the chain combination of Wolfe Wave, we know that there's an extension of the current value that Tesla can have. There's no new news. There's nothing that has been surprising. So what can they do to surprise us in the next one? In order to this stock to be at a higher level, it will need to be start selling product, which is not the case. They're selling, but not at a massive rate. No one is going crazy about having a Tesla. They're nice, yeah, they're comfortable, they have unique style and all that, but the same you can get from any BMW. The only difference might be the electricity, and still it's not well accepted all over the US yet, the fact that you can charge your car. So there are a few challenges for Tesla owners. Now, we're looking at the 5% bring back to 380. So we're going to look if there's anything. So let's start with March, so we can have some time, because we need to go with the volatility of this particular stock. 380 puts, $25. We can't afford that. It's too much. Look at this. Look at how everything is so expensive, from the call to the puts.
Yes. Yeah.
Let's take a
because
quick
it's
look.
too early, right?
Yeah. Still, May still the same. Let's take a look to February. Let's see what we can find there. If any pullback in the first 8 weeks of 2020. Still too expensive. There's a lot of action here.
Yeah.
And January. Let's take a look at for 380. 380 says 520. It's not a lot of interest, no volume. Let me go to the next page. For 380, there's some volume. Volume shows $9. A little bit far from the budget, I must say. We're going to this one. See if there's something else. And that's it. There's nothing right now for us.
There's nothing,
There's nothing we can play with. So probably what we have to see in order for us to be attractive, we will need we have to get into January, see how it moves. And then we'll see if we take February. Let's see if we have anything there. 380. This one, it will be off for us to take a look.
Yeah.
As the 9,000 open interest is attractive. The price rotation itself is telling us that we'll have to take a look at this by January, first week of January, see how it's behaving as he loses time. And then the spread, it's a bit too high. It's close to $1. It's close to $1.
Yeah.
The volume 140. So I'm gonna still put this on the $20.60. OI, it's 9,600. And December 20, that was the close, December 20. And I'm going to add this still to your list. Here we go. Okay. So nothing that we can get out of Tesla right now. Let's look at another company, something that could be of interest for us. Let's talk about Facebook. All right. See another company, apply everything we know. I'm looking at Wolfe Wave. It's barely something here.
Are you sharing it?
Let me go have it on your screen. Do you see it now?
Yep.
I'm looking at different time frames. What can we have? And we totally have nothing on Wolfe Wave. Now, let me expand on the monthly. And let me find the rotation. We have this rotation. This can be the excess.
Because if the Wolfe Wave found something, it would just appear on the chart, right?
Correct. That is correct. Okay. So there's nothing to guide us from the Wolfe Wave right now. So now I'm applying price rotation. Okay, so this is on the macro level view, our eagle view on monthly as usual. And so far, this is the excess. So let me take the pencil. And based on price rotation, there you go. We have a rotation that goes from 122 all the way to 209. So this is about to break. What that will give us as well, we have, if you can see here, you see this pullback, the support. There's a pullback here. I can also talk to you about trend Fibonacci, but we can use this portion, this area of work, as a minor rotation within a bullish rotation. If you see that the stock has been trading up since sometime June to December 2016. This is very important because we're no longer allocating risk capital based on a 1 hour or 4 hour chart, which is what retail traders do all the time. This is a full view of the price range. Now, these levels are what I call in price rotation liquidity windows. What people call resistance and support are professional levels where institutions, they finish dumping their stock, or in this case, to the upside, is taking profits. This is institutions taking massive profits, and see after that it has 1, 2, 3, 4, 5, 6 months of decline. This is not an accident.
Because the institution traders are selling.
Correct. They're selling. They no longer find more value in the short term or medium term, and then they come back to that stock. Not an accident. Look at this. Look at that. A very important level, which is the level where the previous run, the bullish run, started back in the last 6 months of 2016. It's not an accident. So this was respected, and then they found value again at 122, and now the stock is almost double again, almost 80% up from that push lower. Okay. Now, this bearish rotation, this is for us to have a clear understanding. As soon as prices break
the
close
209
and open, close and open above 210, we have a full range of opportunities to understand. How are we going to see that? Pretty simple. Let me remove the pencil and draw the minor rotation. You can take a shape, and that's the range. You define that range.
That's without using the trend Fibonacci.
Correct. That's without using trend Fibonacci. I'm just looking this and sharing this with you at the levels. Okay.
Yeah.
This is something that you can do easily. Practice and looking at specific levels. Always remember, begin your work on the monthly.
Always.
You're looking to make money, okay? And you have to look to measure the opportunity and how the stock will not move. Let me see if I can. Probably can't push it lower. So let's see what I can do. Okay, something like this.
The size of the other rectangle. Okay, so you adjusted it. Can't you just like copy and paste instead of creating a new rectangle so that?
Yeah, there's an option in MetaTrader, but I'm not aware of it. It's easy on TradingView. So this is your macro rotation, one, and this is your minor rotation, okay? And then I'm just going to move this, and it goes all the way up. Now, this price area, okay, it's $46, which means that once we have an open and close, strong open and close above this level, you will see Facebook around 245. That will be a target to the upside. 245 for Facebook. Now, of course, what we also have to have in mind is possible bounce, possible pullbacks for them to continue. Because, of course, what is happening right now is that for this to happen, for this 245, the stock will require more liquidity. It will require more buys. And right now, we know that the S&P 500
still continues to go up.
Yeah, it's trading at 320. So the room for the S&P 500 to keep going up, it's slowly fading. And that means that, so that means at the same time, Facebook chances of keep going all the way up are fading, and it will have to rotate lower as the S&P 500 rotate lowers. One more thing I want to add in this case, let me just switch back to the web. We're going to take a look at FinViz and see something that is always good to know, where the recommendations from different companies. Look at it. Okay, December 18, Deutsche Bank, it's a buy, 260 to 270. It was upgraded by Stifel, another research firm, hold to buy. November 15, Daiwa Securities have it outperform to buy. The target is 235, 250. What that means is that Facebook will be a buy on pullbacks. At that time, of course, we will be looking to have calls targeting these levels. That will be important for us. So what we're going to do now, also, I'm going to share with you another tool today that I want to talk. And remember, all this information I will have it described on, put it on the description, all the notes that you need to have all the time. Okay.
Okay.
One of the tools I use for me to measure, besides, if you remember the tool I shared with you to establish the compound return of the S&P based on annualized, for example, I think I shared this with you. Let me just put it on the screen so you remember. Okay. Do you remember the compound annual growth rate tool that I shared with you?
Yes.
Okay. So a lot of things we do in the war room are a projection of how I see life and how I see my career as a portfolio manager. When I started managing portfolios, it was about, I don't want to call it luck, but for whatever reason, I started the right way. When I was 24, I started my career as a stockbroker, junior stockbroker, and I opened sort of not a thing to say, but I opened my first account, investment account, before I get my license. Before getting my license, I was already opening accounts, and my first account was close to $420,000. I will never forget it. I will never forget it because they paid me with a pizza, pepperoni, medium-sized pizza from Pizza Hut, and I had to share it. Yeah, it's funny, but then I was like, huh? And they basically said because I didn't have my license, it was illegal to pay me. And I was like, but it wasn't illegal for me to bring $420,000 to the company, right?
I know, right?
Yeah, so, and I share these things, and you may think I'm joking sometimes, but like a stand-up comedian, these things are funny because they happen to me. Like they really happened to me. So the second account, so you laugh more, I actually went to the boat of the guy. He lived in a boat. I went to the boat to sign
like
him.
A yacht, like a huge yacht?
Yeah. No, I don't know how to say how many feet because I know yachts are measured by feet, but he lived on the boat and he took the boat from Belize to Panama when I was living in Panama. So it was something nice. It was really nice. Like those boats that you take out for during the weekend and go fishing, that kind of boat. No, but he has like 2 rooms, Jeep, all the technology and GPS. It was pricey, probably, I don't know, $250,000 worth, but he lived there.
Yeah.
Signed him for $500,000. That was my second account. So right there, by 24, I had already like $1 million, and then by that same year, I had a couple $1 million accounts. So what I used to do is use portfolio management. Now, there are a lot of tools now, and this is one tool that I use with my brother, and is, you see now, tip ranks. But I got tip ranks via NASDAQ because all NASDAQ, which is NASDAQ.com, they have a partnership with tip ranks. What tip rank does is that they go into analyzing all the securities that you have in portfolio, give you all the estimates. So you can see here to this analyst price target, and also these alerts give you who is who from all these websites in the US, Monthly Fool, Seeking Alpha, Street Insider, all those investment banks, all that information in one place. That's why I use it. I think it's like $75 per quarter, the pro version, and there's a premium one. And I pay for it, I use it, and this is how I measure probabilities on where are the investment banks ratings and all that measure. And there's a lot more to use, but I only focus on that. So I'm going to throw, what I'm going to do now is just throw Facebook here. See what we get. Here we go. We have it here. And see that analyst price target is 235. It's telling you based on the current price that there's a 13.93% upside.
235. Where does? Oh, right there. Okay.
You see it? Perfect.
Yes.
And then if I click here on the bell, You see Investor Plays, Seeking Alpha, Market Watch, Seeking Alpha, all the analysts. And also it tells me the level of quality of that particular individual or that particular source of information.
Yeah.
Okay, for example, you get this one, Markets, has a 1-star rating. Seeking Alpha, this particular writer, Stephen Fiorillo, he doesn't have like a huge follow-up that can say that, okay, he's a target buying recommendation. It's an important buying recommendation. He's no Steve Mandel. So I pay attention to that. Now, this information, we have Facebook as a strong buy. But understanding, going back to the charts, because this is very important. If you go back to our charts, we go back to work. We know now that, yes, there's a rotation, there's a massive rotation. We're in this portion of the rotation, and it goes all the way to 245. Now, my question is, do you think you needed those analysts to tell you where the stock is going?
No.
As long as you command price rotation and trade Fibonacci, no one's going to tell you what is going to happen.
Yeah.
You already know.
They can be just confirmation, validation.
In a way,
added confirmation, but you really don't need it.
Yeah, you really don't need it. All the information you have is on the chart.
Yeah.
Your ability is to measure, understand variation, 5%, 10% variation, where to look, understand price rotation related between what's happening with the index and what is taking place with the stock. Understanding that this stock is already into the very important critical zone. Yes, it may break, but it can easily just break, do this, and bounce back because it requires liquidity to keep going up. And that's your opportunity. So when you look at Facebook and Facebook trending lower, you will see that if you're in a put as your opportunity to make money in a short term, medium term, but you are aware that the final target for Facebook is 235 to 270. You already know that. So that positions you into pullback, and you look for the vehicle. You look for the call. But you need to have that. You need to have that mapped. You need to have your map into 2020 and follow ideas right away. So now we're going to jump down. We're going to jump and we're going to go back to work on old NASDAQ. And let's see what happens. We're going to old NASDAQ. So very important.
So that's how you predict when it's going to happen, by going through the monthly chart time frame.
Correct. Price rotation.
Price rotation. Yes.
Price rotation. That's what it is. There's nothing else here. And remember, price rotation, because you are aware of what is taking place in the equity index. That's what it is. And understanding also the company itself. Facebook is another company. It's a growth stock. They don't produce not even toilet paper. It's pure marketing. Who else? Pure marketing and avoiding taxes.
Right.
So that's what it is. So I'm going to go into Facebook. So I think Microsoft is more important than Facebook. Facebook has nothing else. And remember one thing about Facebook, fundamentally speaking, a lot of their recent revenue is coming from Instagram. Yeah, keep that in mind. Now, we're looking into understanding a 5% drop, which shouldn't be a surprise to you, will take us to 190. A 10% drop will take us to 180. This is simple math, taking consideration that we're trading at 206. So again, I want to start with time. So I look into March 20 and let's see what we can find, or let's see where is the activity trading take on the puts. Now, here we go. Look at this. Not a bad thing right away in front of us. March 20, we're looking at a very decent amount of action. This is 180, 190, and it's trading at 435. Right away, I'm going to take this one.
Put that on a watch list.
Right away, absolutely. I'm going to add that. But also, I'm going to do something else with the March one, because as soon as we open it, it was catchy. It was eye-catchy. The 190, see how I do it over here. Look at the top, okay? It wasn't on I'm gonna put
Oh
8.
yeah.
Okay.
Yeah.
I'm gonna click enter and let me see what we have.
Ba-
Oh,
based based on the 10% or
based
9% or
based on the 10%. Remember, look
yeah
at this. Let's
yeah.
have it on the screen for the purpose of
Mm-hmm.
the ICS. Okay, so it's 2
Mm-hmm.
of 6 minus 5%.
Mm-hmm. Mm-hmm.
1 second. Let me remove this. Minus 5%. Let me get my pencil again. 5% will be a $10 drop.
Mm-hmm.
So that will put us at 196. But I will go for the 190 put.
Mm-hmm.
Okay. If this drop 10%, it will be a drop of $20. What it will take me? 186. I will go
Yeah.
for 180.
Yeah.
Okay?
It's within the range.
Within the variation range. Now,
Yeah, within the variation range.
correct. Now, let me really quick jump to the chart because this is something that we have to look in right there in the chart.
Mm-hmm.
Where is my... I go to the chart. Okay, let's look at the chart. So we are here. Not an accident. Not an accident. For the put version, there you go. 192. Look at this. 1, 2, 3, 4, 5, 6. Multiple
Yeah.
resistance back in time, all the way from
Yes.
2016, that will behave as a critical support.
Right.
Yeah, but hey, let me look a little bit more. Look at this point here. This resistance level, it's the high back on October 2017. Not an
Mm-hmm.
accident. It's $180. I'm going to draw this, and there you go. These are 2 points that are clearly, look at it, 1 and 2.
Hello?
Hello, do you
Oh,
see it? Yeah, I'm here, I'm here.
yeah.
Do you see it now? So these are the 2
Yeah.
levels that has our interest as far as looking for put options. Okay?
Mm-hmm. Mm-hmm.
Draw it. Let me now clear all drawings and go back to old NASDAQ. Now, look at this, the 180. There we go. We found you. Okay, this will be added. So, two right now at 227.
Mm-hmm.
Open interest, look at it, Alan. 5,000.
5116.
Correct. Look at the spread. The spread is a little bit of a killer, mood killer here.
Yeah.
It's
Yeah.
huge, but wait for
It's
it.
going to improve in time.
Yes, and the volume, it's not bad. It's a 607
Yeah.
volume, okay?
Yeah.
So this is as close of December 20. I'm going to add it to our list because this one has something that we want. It's already trading at 227. So I'm going to add it there. That's the March one. And the most important that I have to say I like about this also, look at the price rotation, 17 by 220 or $17 by $2. And then also like the fact that it's at 227. It's below the 250 rule in the war room. Okay. Also, I like the fact that the company is already trading. Let me just move this. The company is trading at 206. So if there's a slightly push into 210, I bet this thing will go to $1. And then even at the $1, because we're talking, there's a 60 cents spread, this will go roughly for $1.60. Still a dollar, almost 90 cents below or $2.50 rule. And the most important, we got time.
Yeah.
Got plenty time for Facebook to do a lot of crazy things, and then whoosh, as it lose power. Brilliant.
So the spread improves as well in time, right?
As more, look at this perspective. Imagine, fly like an eagle. Right now, everyone is on the hook of the holidays. The S&P is rotating higher. The VIX is doing nothing. It's at 12. Everyone is happy. but that comes to an end. Okay? So when that comes to an end, the big boys, they will start covering their downside. How? Buying puts. So they have to go to the option market, and they need to cover their upside, because remember, the hedge funds, they no longer do the short selling by just going short shares. Remember, short selling via picking shares from your broker is expensive. They have to pay that. They have to pay money. So you have to go short. You have to eat potential losses, plus you have to eat the percentage that your broker is going to charge you to do that. So the mechanism is expensive. So what do? You protect
they go
yourself.
For the options.
Exactly. Why?
As a leverage.
Leverage and reasons why is cheaper.
Yes, it's cheaper, and the profit is outstanding.
So you can hedge potential losses from holding the Facebook stock. You don't require to sell the stock. You just require to hedge. So the stock goes down, and then the option, the put option, goes up in value. So your common shares going down, the option of your put is going up. And remember, the number two, the reason number two is time. Always time is very important for them, because as they hedge, they're totally covered. So people think, in the old days, I remember when I was at the firm, uneducated people used to come up to the office to sell hedge funds, saying that the hedge fund has the capacity to buy and sell. But no one actually ever explained how that takes place. It's not accurate to think like a hedge fund has $100 million worth of Facebook, and then tomorrow morning they're going to sell everything and they're going to go short. It doesn't work. It's impossible. It's crazy to think that that's real. But people, investors and the public, Main Street, no one cared to explain really what's the mechanism and how these big boys can short the market. What they do, actually, that's what is called hedge fund. It's hedge. It's always, well, that's what they're supposed to do mostly, but they don't. But the real guys that they always make money is because they are long the equity, and they know that if the equity is going down, they already are using a vehicle to protect their downside, because they are making money as the stock is going down, and then they expect the bounce of the common share, and they're out of the option. So they have money to offset the losses. That's how it works. That's the mechanism. They don't sell the stock and go short tomorrow morning Facebook. That's not real. It's not doable. That doesn't work.
They want to keep their underlying shares.
Exactly.
Shares.
And they hedge. They structure the trade. So when the trade goes against them, they are prepared. And this is why they win, because retail traders, first, they don't know this. And second, retail traders have one thing that is the killer thing. They trade directional. Directional trading, it's complicated because you don't have anything, you don't have a couch to protect yourself in case something goes wrong.
Right.
So this is why this is important to understand how we use it. Look at this at 227. 227 is nothing to protect ourselves from the downside. And looking at 180, this is when we know how low it can go. So of course, we added this. We're going to keep it tracking, and this is our opportunity on Facebook. This thing goes to $1. It's highly attractive. And what we're going to do is we're going to keep an eye. We have the levels. We understand the rotation, and we know exactly what Facebook will do based on the S&P 500 behavior. If we get this at $1, this is a go-go. And we have time. And remember, contract high, $17. There's opportunity here. We're closing War Room ICS Intense Coaching Session number 19. We're going to have a 10-minute break, and we come back for number 19, back-to-back session on Saturday. Thank you, Alan.
Okay. Thank you, Jose. 10 minutes.
Break, yes.
Yes. Okay. Thank you, Jose.
Thank you.
Okay. Bye-bye.